G'day folks, welcome back to another update for natural gas. Now we're continuing to break resistance and keep running bullish momentum. So the charts are moving upwards. We'll go to that in a minute. We're going to include some back testing. Also make sure you hit that like and subscribe button to support the channel. And also do reference the +1 videos. That's where we do a deeper dive into the trading strategies we discuss in this video and others. In terms of the outlook, despite a modest increase in supply, especially LNG, the global natural gas market remains tight and delicate in 2025, with demand growth flattening to around 1.3 to 1.5% and regional demand very uneven, stronger in Europe, North America weak or negative in Asia and Eurasia. Pipeline export cuts, notably from Russia to Europe, and low storage levels mean fundamentals are vulnerable. Layered on top of this are significant geopolitical risks from the Russia-Ukraine war to Middle East conflicts and energy transit choke points, which add a risk premium and raise the prospect of sudden price volatility. In short, the gas market is operating with minimal slack, and while supply additions are on the horizon, any escalation or conflict disruption could rapidly push prices higher. So first, looking at the natural gas weekly chart, you can see the price is still above the moving averages, and so is the CCI, and that gives us bullish momentum, anything above the moving averages. Also, the moving averages have turned up and starting to widen, which is a positive. So let's, and there's no divergence that I can see to be concerned about. Let's look at the daily. Now the daily's also broken through this 44.70 resistance we had previously. So I'm going to move that up to that new resistance area there. Notice the CCI is still rising and the price is still above the moving averages. So again, bullish momentum, no sign of a pullback and no divergence signs yet. On the hourly, now this could possibly be a divergence. You can see there a double top, almost a triple top on the price. And if we drew a trend line on the CCI in the same period, you can see the CCI is dropping. So that could be a very slight bearish divergence. And if that started to break down, we're only going to draw it to that level of a Fibonacci, which means it's probably already reached that level if we drew it. Oops, let's do it Fibonacci. And you can see there it's already broken. Actually, no, it hasn't. So let's mark that between that range. It's a 23-38% range. That's a minimum retrace we can expect if it does pull back based on our Fibonacci rules of a retrace. But at the moment, avoid going long until we see the CCI start breaking higher, and by that stage you'll see the price break through that resistance. In terms of a, let's go back to the daily for a moment. In terms of a back test, we would have started going long from this period when both the price and the CCI were above the moving averages on the daily, which means we start going long on the hourly. And the hourly back test is showing us this. This is where we would have started it from around the 4th of September. So again, I like to zoom out at these levels, and when you see the moving averages turning up on both the CCI and the price, you buy. And when you start seeing the moving averages starting to bend down, especially when you see a bearish divergence, you get ready to exit the trade. So ideally probably would have exited somewhere around that area there, and that would have been a small gain, possibly holding a position or two. Avoid going long during this period. Remember, we're only going long, we're not going short. Avoid going long during that downturn on the CCI and the price, and started going long again during this little period when the CCI and the price started moving up. Again, closing it out at that level there. And follow that same strategy. Again, notice here we had a bit of a drawdown. You would have avoided that by closing it out at this level. Once you start seeing this bearish divergence, so you would have got out somewhere in that period there, maybe holding a contract or two open, and you would have closed it out with a stop at that point, and you would have avoided that drawdown. Then started going long during this period when you see the moving averages break to the upside on both the CCI and the price, and so on and so forth. And then until where we are at the moment, you would have taken a fresh trade at that point, and you possibly would be getting ready to close it out whenever you see this moving average band start to turn down like it did here, for example. I like to close it out and take some small gains when the CCI is entered in that little period there. So you would have gone long on that candle there and closed it out in one of those little candles there near the top. So make those few little pips, and then again, like I said, I wouldn't be in the trade at the moment. I'd wait for this to break higher. The price is already higher than moving averages, and then enter another long trade if it does eventuate. So for BOIL, that was bearish throughout the most of 2025. Although notice the price has broken into that moving average range. The CCI likewise is probably still bearish, although it's probably touching that. It's a bit hard to tell. Let me zoom in for a moment. Yeah, it hasn't reached the moving average band yet on the CCI. So it's still bearish. So the weekly is still bearish even though the price has broken into that moving average range. So wait for both the CCI and the price to move above that range to start taking long trades on the daily. Remember, we always trade in the direction of the higher time frame. So the weekly at the moment is neutral to bearish. On the daily for BOIL, that's already broken above the moving averages on the CCI and the price. So if you're trading on the 1 hour time frame, according to the daily, you go long. So you would have started going long from that candle there when both the CCI and the price broke higher than the moving averages, and you'd still be in long positions at the moment. And what we look for, and I've started the back test from this period around the 29th of September. So looking at the 1 hour period, a bit of a roller coaster event chart here, but basically going long during these periods, closing it out when the moving averages close below when the price and the CCI close below the moving averages. Again, going long, closing it out, going long, and closing it out there, then starting long again. So the back test for that on the hourly looks like this. Now, I've let it run through the whole period, and basically with these average downs, you've got to let it breathe sometimes. Now, in this case, I've let it run, and you can see there it held on to that, added a position, and it closed it out. Now, I'm not suggesting you do this. I'm just showing you what can happen. If this kept falling, then this drawdown would have been a lot bigger. So always close it out whenever you see the price drop below the moving averages. And I deliberately show you what's happening here so you can get an idea of the drawdown effect, which is not what you don't want to do. So where we are at the moment, as I said, you'd be opening up a new contract at that point there, and you'd be probably closing it out about now on that candle where we are at the moment as we record. So for KOLD on the weekly, you can see there it's a fresh breakout last week with the price breaking below the moving average, and this week's continued. The CCIs are also in a bearish momentum, so bearish momentum on the weekly for KOLD, and there's no divergence on the weekly. On the daily, again likewise, that's bearish with both the price and the CCI below the moving averages, and you would have started going short from that candle around about the 20th of October. Bit of a false break there. Notice you wouldn't have gone long because the CCI is still in a decline with the moving averages. You just retrace and it broke further to the downside. And again, there's no divergence to be concerned about. There was a divergence back here, a double top on the price versus lower highs on the CCI. That broke down just below our 23-38% range, bounced near that resistance, and it broke to the downside again. So again, we'll be going short from the 20th of October on the 1 hour time frame. On the 1 hour, again, you can see there going short during those downturns on both the CCI and the price, closing it out at that level when the price starts turning up. Or if you want to get out early, wait for the CCI to break into the moving average range. Avoid trading long, going short again. You can close it out again, early exit there with the CCI. Notice it gives you an exit near the bottom rather than waiting for the moving average of the price to start turning up. And then another bit of a false break there, went sideways and then broke down again. Now on the back test, we're going to look at the short back test here. And again, you can see there following that same pattern. Now you can let it run, like I said, and following the moving averages, or you can be a bit more conservative and close it out when the moving averages are entered on the CCI before the price moving averages are entered. So it depends on what your trading style is like. I like to get out when the moving averages on the CCI are penetrated like they are down there. And you could have let that one run, for example, during that little period, let it run, wait for that moving average band to start turning up. That's gone sideways. You possibly could have kept holding on to it and then keep following it to the downside. So for UNG on the weekly, that's a fresh breakout on the price moving averages, and the CCI is also fresh breakout. So start going long on UNG, even though the moving average band is still in decline. That's still possibly a good starting point. There's no divergence currently on that. We did have there is a divergence. You can see there a very long-term bullish divergence versus lower lows on the price. So that could be the start of a bit of a retrace. And looking at the daily, On the daily chart, we would have started going long on the hourly based on the 17th of October. So on the daily, the CCI is bullish, so is the price, and there's no divergence to be concerned about. Looking at the 1 hour time period, you can see that it's broken through that previous resistance at 14.16. Bit of a sideways move there, but it finally broke higher, and so did the CCI. But notice if you went long on that candle there, or possibly even that one, you'd be probably getting close to closing it out about now on that candle as we speak, because that CCI is touching that moving average band. Now looking at the back test, going long from around about the 18th of October, again riding the wave long, closing it out when it breaks to the downside. Riding wave long and probably holding on to it. It's going side, the moving average band's going sideways, and you'd still be in a trade on that one possibly. Again, it's an option if you want to close it out earlier when the CCI touches the moving average band, to be a bit more conservative and wait for it to break higher like it did on that candle. So there's a few start and stops, but again, it depends on your style. If you like some share trading ideas, why not subscribe to the Patreon page? These are some of the trades we've taken since the 21st of September this year. A few small trades there over that month, and it's generated about 9.67%. Nothing's closed out since we've entered a few more trades recently. So again, consider subscribing to the Patreon page where we look at weekly bullish shares, and that's where we also run our portfolio. So hit that like and subscribe button. Thanks for watching, and we'll see you in our next update.